So as we take a look at what we're looking at here on this chart, and we want to go ahead and get into the second stage of what we wanted to talk about here today, which is reviewing trending and non-trending chart patterns. Now, we did have a session where we utilized the PRS, IBFX PRS, the pattern recognition. I'm a big fan of the PRS. I think it's a fantastic tool. Okay. I also know that, like any other tool, if you use it at the wrong time or the wrong way, it's not going to do you any good. So part of what we want to do is understand trending patterns versus non-trending patterns. Okay. So it's the same type of assessment that we would do on our IBFX4 platform for any particular time frame. Now, one of the things that I did activate on the IBFX4 platform on the 15, 30, 60, 240, and daily when we talked about chart patterns was I did activate the IBFX Auto Chartist. And let me see if I can get that on here right now, because this was a neat feature. What it does is it takes the PRS standalone platform, and you can have overlaid on your chart certain patterns depending upon the settings on the plugin that you request, and how many emerging, how many complete patterns. So while this is actually starting up, let me show you the IBFX PRS, okay, which is what you're looking at right now. Let me just move that over. Actually, let me, well, I guess this size is fine. You can see it's a very compact platform, which is nice. And what we're looking at right now, what I'm going to have us jump over to, is the actual patterns, because one of the reviews I also want to have today is the trending versus non-trending patterns. Chart patterns are really, really a great way to start off with this whole idea of there being trending and non-trending setups. That's why I like chart patterns to start off with, because they really drive home this concept of sideways markets and trending markets and the different setups within each. And people who think that chart patterns don't work or somehow we should outgrow them, think again. I've been at this for nearly 20 years, and I still find chart patterns a main staple of analysis for my trading. Now, it works to recognize the support and resistance levels on the chart. Okay, we still have to understand risk management and confirmation and all the other things that would go along with any kind of entry strategy. But chart patterns work because they recognize key support and resistance levels on the chart. Now, it's still up to us to do the rest of the homework right. It's still up to us to recognize a good chart pattern versus a bad chart pattern, making sure we're looking at a trending chart pattern in a trending market and a non-trending pattern in a non-trending market. There's still a lot of homework to be done to accompany this. So let's take a quick review of trending versus non-trending patterns, okay? And then hopefully we can also take a look at the overlays on the live chart, all right? The charting that we've been using throughout our time here together has been the live IBFX platform, okay? I'm not a big fan of PowerPoint. I'm not a big fan of frozen images. I'd rather you see what's on my desktop and how to navigate, because I'll tell you, the world of trading is not a PowerPoint. The world of trading is a fast place where you're training your eyes to notice certain nuances, and to me, the only way I can share that with you is actually show you my desktop, show you my trading desktop. So that's what we kind of eschew PowerPoint and go with this whole live immersion type feel. And I know for a lot of you it's a big adjustment, because this requires that you take notes. The ideas are not going to be doled out in a big PowerPoint headline. I really want to train you into what it takes to be a trader, and that is absorbing the information, watching what's happening in front of you, taking active notes. Obviously, that's why you have the Q&A, and that's why you can contact me by email. But I really want this to be an immersion experience, because that's how you learn best. Seeing it, hearing it, and then doing it. All right? It covers our 3 types of learning processes. All right, so triangles are fairly simple, non-trending. We want to trade triangles when the market cycle is showing us a 3 o'clock or maybe sometimes even a 2 to 4 o'clock, but a sideways angled wave. Okay, that's going to apply for triangles. That's going to apply for rectangles. That's going to apply for head and shoulders sometimes. Head and shoulders and flags, by the way, are those funny little patterns that can occur in both a trending and non-trending market. So I'll include that here. Most definitely triple tops and triple bottoms, double tops, double bottoms, and pennants. Okay, so you can see all these sideways patterns we're looking for within a 3 o'clock, ideally a 3 o'clock or 2 to 4 o'clock wave angle. All right. Okay. Trending patterns. Really simple. Trending patterns are about as simple as just reading the description of the pattern. Trending patterns are channel down, channel up, falling wedge, rising wedge. Gang, for me, again, this is my opinion, but for me, the secret to successful trading isn't necessarily the strategy. And that might sound strange, right? That might sound really strange. It's not the indicator. I think there are literally probably hundreds of applicable, effective ways to trade in the market. Okay, I have friends of mine who trade strategies completely different than mine. Okay, but the one thing that we agree upon, the one thing that I've found that traders who do this well agree upon is they understand market cycles. And as I had mentioned in the previous session when we talked about market cycles, this comes from literally 100 years ago with the writings of Charles Dow and what's known as Dow Theory and the idea of market trends. This is not a new idea. It's an idea that's sadly been forgotten and discarded. And we're bringing it back. We're giving it an indicator. We're giving it the wave so we can identify the market cycles on different time frames, and therefore we can apply the right strategy, trending versus non-trending, to the market, as well as, for those of you that like indicators, you know, if you like a stochastic, gosh, you're going to love a 2 to 4 o'clock market cycle. You're going to love a distribution cycle where there's exhaustion at floors and ceilings. If you love playing breakouts and breakdowns, and you love that MACD traditional available at the IBFX.com website, you're going to love those 3 o'clock waves waiting for breakout and breakdowns through patterns like triangles, pennants, even rectangles. Okay? So, again, it's a matter of understanding that there's so many ways to successfully trade. I am certainly not here to tell you that this is the only way to do it. I'd be insulting you. Heck, I'd be insulting me if I told you that. There's so many ways to effectively analyze and trade the market. But I do believe, and again, I think I have a pretty, Charles Dow's got my back on this one, and I feel pretty good with that, which is understanding the underlying trend of the market is the key to applying the right strategy and the right indicator at the right time. For those of you that sometimes, and I'm sure all of you have experienced this, this is usually kind of my anecdotal justification for bringing you over to this way of thinking. I'm sure there are times in the market that for weeks, if not days, maybe longer, that you've experienced that your strategy, that same strategy works like gangbusters. I mean, you cannot do any wrong. Whatever that strategy is, just keep applying it, bang, 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 it's working great. Then all of a sudden, with little or no warning, it just stops working. And you have no idea why. Okay, I don't care if it's a chart pattern or an indicator or whatever strategy you learned. Usually, the culprit is one of two things. Okay, the obvious one is the market cycle shifted, right? Whatever market cycle the market was in before, when you were slaying it, when you were kicking you-know-what and taking names, was the market cycle that was appropriate for that strategy. The other culprit is what I call kryptonite. That's when the ego gets in our way. When we start making a lot of great trades, all of a sudden one of these trades is going to be kryptonite. We're Superman, and eventually we're going to run into kryptonite. And it takes our superpowers away. And that's an ego issue. But I think more often than not, it's not an internal psychology issue. It's not that kryptonite problem. It's actually external. It's a market psychology issue where we have not been taught and trained to make sure that the market cycle identification becomes the first thing, the foundation upon which we build the remainder of our trade. So all the strategies that you know right now, I think they're all excellent. They probably are in their own right. The error usually comes because either one, you weren't taught when to apply it as far as trending versus non-trending, or you did not have a way to recognize it, even if you were taught it. So this is going to address, this wave and a look back is going to address that issue. Okay, now if you don't have any idea of trending versus non-trending strategies, well then chart patterns are a super, super effective way of doing it. And of course, they're automated using the PRS platform. Okay, all right, so let us head on over back to the IBFX4 platform.